Good evening, everyone. My name is Aisha Solomon. I am the Alachua County Property Appraiser. I would like to thank you all for joining us this evening. This evening, our office will be collaborating with the Alachua County Tax Collector Office to help us provide homeowners with a holistic view of what to expect throughout our offices throughout the year. During this presentation, viewers are encouraged to use the Q&A chat box as our office will be monitoring this feature throughout the webinar. However, questions that are submitted during the webinar registration process will take priority. All questions submitted through the chat box feature will be answered as time allows. In addition, please be advised that the session will be recorded and is subject to later use as our office sees fit. Let's begin. Our purpose. The Alachua County Property Appraiser is charged with valuing all the property in Alachua County and administering all property tax exemptions in an equitable manner. Our mission: to proudly provide quality service to our customers and to assure the equitable administration of the property taxation laws and best practices.
Thank you, Aisha. Now let's talk about the overview. The property appraiser is tasked to serve four main areas. We need to identify and list all the properties in Alachua County. We need to value all the real and tangible personal property. We administer exemptions and classify properties, and we facilitate the tax process. As you see on this next slide, these are important dates on the tax roll calendar. You can see on the left side of the screen, on January 1st, we determine the property ownership, value, and exemptions and classifications. In February, we look at the automatic exemption, classification, renewal notices being mailed out, and tangible personal property returns being mailed to owners. March 1st, again, very important here, deadlines for homestead and other exemptions, the filing deadline for classified use properties, the filing deadline for agricultural classification, the filing deadline for organizational exemptions. Again, those are the deadlines, March 1st. April 1st is the deadline for the tangible personal filing returns. And June 1st is a deadline for submitting the income information for limited income seniors 65 or older who have filed for exemption. As you see, July 1st is when we submit our preliminary assessment roll to the Department of Revenue, and denial notices are mailed for exemptions, agricultural classification, and portability. In mid-August, this is very important, we mail out the truth and millage notices to all the property owners. The trim notices contain your taxing authority proposed property taxes for the year and the budgetary hearings, and the deadlines for filing for petitions. Again, even though you receive this trim notice, in the upper right-hand corner says this is not a bill, but please, please, please look at it. It's very important. September 1st is the deadline to appeal market values, deny portability. I think it's actually this year's September 15th is the deadline. We'll talk about that here shortly. And October 1st is when we have to submit our final roll for submission. Next slide. And how do we facilitate the tax roll process? We provide estimates for budgetary purposes. We provide trim notices, propose tax bills for our customers, and then we also certify the final tax roll.
Good evening. This is Matt Geiger. I work for John Power, the Alachua County Tax Collector. I'm going to talk about a few things to prepare us for the tax bills that we'll be receiving later in the year. Let's look at our tax bill timeline. The tax collector receives the tax roll from the property appraiser about the 15th of October, and then the annual tax bills are printed and mailed by November 1st. So it's a very short time period there. You'll receive discounts depending on the date that you pay your taxes. If you pay in November, you get a 4% discount, 3%. If you pay in December, 2%. If you pay in January, 1%. discount in February. If you pay in March, you don't get any discount. So that's current tax payment information. The other option of rather than pay once a year, we do have a quarterly payment option, and we call it the installment plan. Now that begins the prior June. So annual bills go out in November. You start quarterly payments the June prior to that. So if you sign up to pay quarterly, you pay June, September, December, and March, 4 times a year. And let me explain that a little better. So the first installment bill is mailed June 1st. The second will be mailed September 1st. Now, these first 2 installments are the amounts for the first 2 installments are just estimates based on the 1/4 of the previous year's taxes. And this is important. These do not reflect the current values or exemptions. And sometimes that's confusing. But anyway, it's a really good plan. We encourage anybody that's would like to do the quarterly plan to do so. You do receive a 6% discount in June. You get a 4.5% discount in September. Then we get the tax roll from the property appraiser, and that mid-October. So now we know what the actual taxes are going to be. So the 3rd and 4th installment, the 3rd installments in December is calculated based on the new taxable values and exemptions, and then a 3% discount applies to that bill. Then the 4th installment bill is mailed in March 1st, and you don't get any discounts for the March bill. So overall, the installment plan goal was to get you the same 4% overall discount as if you paid your annual bill once a year in November. On your tax bill, there's 2 types of taxes, ad valorem and non-ad valorem. So ad valorem taxes are based on the taxable value multiplied by the millage rate. Our taxing authorities who are responsible for setting those rates are listed, the Alachua County, the Library District, the School Board, the Water Management Districts, and then the municipalities, all of our municipalities, the cities, and then our Children's Trust. Okay, so non-ad valorem is based on value. Ad valorem is based on value. Then the other area, the non-ad valorem assessments, these are not based on value, but on the improvement or service costs allocated to the property. Let me try to explain that. So, for instance, if you get your garbage picked up and you're in the rural areas, there's a non-ad valorem assessment for that. It's Alachua County Refuse. So the levying authorities are responsible for setting non-ad valorem assessments: the City of Gainesville Fire, the City of Newberry Fire, City of High Springs Fire, Alachua County Fire. There's PACE programs, Alachua County Refuse, Solid Waste, Stormwater, Paving, the City of Alachua Stormwater, Parker Road CDD, and the Finley Woods CDD. So those are all of the non-ad valorem assessments that could be also on your tax bill. Just want to talk a little bit about delinquent property taxes. So your bill comes out in November, and as long as you pay it by the end of March, you're paying on time. But starting April 1st, your property taxes are considered delinquent. And so for 2022 taxes, the taxes will become delinquent April 1st, 2023. The delinquent taxes, by law, we have to advertise those in a local newspaper 3 times in the month of May. And then a tax certificate will be issued on June 1st. So a tax certificate is the first lien on the property, but it doesn't put your property in danger for about 2 years. So and then during that 2-year time, if the homeowner pays the taxes, they redeem the certificate, the lien is removed, the taxes are paid, the property's not in any danger of being sold. Now, certificates that are 2 years old, they do put the property in jeopardy of being sold at a tax deed auction. We want to talk a little bit about deferred taxes. Deferred taxes are for homestead properties. This is available to all citizens that qualify, but it's primarily designed for senior citizens. So the qualifications to defer your taxes is you must have homeowners insurance. Your outstanding mortgage balance can't be more than 75% of the assessed value. It must be your homestead. And then for senior citizens that qualify for the senior exemption, you automatically qualify for total deferment if you choose to defer your taxes. Owners that are under 65 years old with income less than 10,000, they also qualify for total deferment. So deferment does not forgive the taxes. Okay, so that's good to know. It just allows you the taxes to be paid at a later date and with very little additional interest. So deferred taxes are not considered delinquent taxes. So this is a program that's available if you qualify, and not many people are aware of it. So we wanted to mention that tonight. Lastly, I want to talk about a couple of programs in the county to help if you're in a hardship situation. So there's assistance programs for senior citizens and low income on homestead properties. And these are for some of the non-ad valorem assessments. So if you're out in the rural areas and you have county fire, stormwater, refuse, or solid waste assessments, you would call the Alachua County Social Services, and they have a program that the county, they administer the county's program to help low-income seniors that have a hardship paying these taxes, and they will remove those. When your bill comes out in November, that's when you'll want to call and talk to social services if you need assistance. If you're in the city of Gainesville, the city of Gainesville has a program to help assist you with your Gainesville fire assessment. Now, for that program, you have to call in January prior to the bill coming out. So like January of 2022, which is past, of course, but you apply for that similarly as you would for homestead exemption, so in that same kind of time frame. So those are the areas where there's available assistance. So any additional questions, please contact the Alachua County Tax Collector's Office, 352-264-6968, or visit our website. Thank you.
Hi, my name is Christian Kao. I am the Director of Commercial and Residential Valuation for the Alachua County Property Appraiser's Office. I'm going to talk about TRIM. In mid-August, well, first of all, TRIM stands for Truth in Millage. So in mid-August, our office mails out the TRIM notice to all property owners in the county. TRIM notice is going to contain the following information. It's going to contain the property appraiser value information, the taxing authority information, the taxing authority hearing information, any non-ad valorem assessments, an explanation of each section, and a deadline for filing a petition with the Value Adjustment Board. Here we have a sample TRIM notice. On this notice, on the upper left-hand side, you're going to see our Alachua County Property Appraiser, our mailing address, and our website. Under that, where it says Prop ID, that's our internal number for your property. The box that's under that, that's where your name and mailing address would be. The property owner's name and mailing address will be in that box. In the middle, it says where it says tax code 1700. Every municipality is going to have their own tax code. This property is in the city of Alachua. City of Alachua tax code is 1700. On the box to the right, that's the site address is going to be the physical location of the property. GOID is going to be the parcel number for the property, and then we have the legal description of the property. Moving down, we have that pink outline. That's last year's value with last year's millage rate and last year's tax dollars paid. And in the blue box next to that is going to be the current year's value. Column 5 is going to show the current year's millage rates if no budget changes are made. Column 6 is going to show what the actual tax dollars will be, multiplying the value by each millage rate if no budget changes are made. And column 7 is going to be the millage rates that the taxing authorities are proposing if the budget changes are made. And column 8 would be the actual tax dollars multiplied by by the millage rates if the budget changes are made. In reality, your final tax bill is going to be somewhere in between columns 6 and 8. Some taxing authorities will approve their budgets, others will not. In the box on the bottom, the red box under that, that's going to show the property appraiser's value. The first line is going to be the prior year's value, and the second line is going to be the current year value. The first row, the first column is the market value. On the column after that, that's the assessed value, which applies to the school millage. And the column after that would be the assessed value that applies to the non-school millage. The difference between the market value and the assessed value would be any deferments that the property has. If it's a single family home and it's the owner's primary residence, the property is capped at a maximum of 3% a year. So the difference, the market value is always going to go up. The assessed value can only go up a maximum of 3% per year. So the difference between the market value and the assessed value, the deferred value, that's what's being subtracted and getting the assessed value. On non-homestead properties, the school board does not recognize any caps. So that's why there is an assessed value which applies to the school millage and an assessed value which applies to a non-school millage. In this example that we have here, we have this appears to be a homesteaded property, so both the school and the non-school taxing authorities recognize the assessed value. The green box under that shows what the assessment reductions are. This property owner has a Save Our Homes, and in 2020 they received $33,000 of deferred value. The value went up a little bit in 2021, and their deferred value went up to $38,000. The blue box under that is going to be any exemptions that are on the property. This is apparently their primary residence, so they are receiving the $25,000 exemption. We say that it's a $50,000 exemption, but once again, the school board does not recognize the additional $25,000. So while all the other taxing authorities will give you a $50,000 exemption, the school board will only give you a $25,000 exemption. And then in the yellow box off to the right, that has our mailing address, our phone number, and very important, this date on the bottom. That is the last day that you have to file a petition with a value adjustment board. So if you disagree with your value, feel free to come in, give us a call at that number. Feel free to come into the office. You can sit down with one of our appraisers and we'll explain how we came up with your value. But if you feel that you want to take it to the value adjustment board, there is a deadline. And this is an older trim notice. So that date is obviously for last year. I believe this year, the last date is September 12th. The next page shows the back of the trim notice. On the back of the trim notice, you're going to see where this green box is. This is where the taxing authorities are going to hold their hearings. They have to hold hearings to approve their budgets, and they are public hearings. So they list the date, time, and the location of where each hearing is going to be. So you as a member of the public are free to go and voice your opinion. The orange box under that is where the non-ad valorem assessments are assessed. For this particular property, there's only solid waste residential for $20.78. So you received the trim notice in the mail, and you're wondering where the property appraiser came up with their value, or how the property appraiser came up with their value. Well, Florida law says that we have to follow 8 criteria when we're valuing property. We have to consider the present cash value of the property, which is what a willing buyer will pay a willing seller in cash in an arm's length transaction, the highest and best use of the property, the location of the property, the size of the property, the cost of the property, and the present replacement value of any improvements, the condition of the property, the income derived from the property, and the net proceeds of the sale of the property as received by the seller after all the usual fees and costs of the sale. So with these 8 criteria, how do we apply these 8 criteria when we're estimating value? Well, there's 3 approaches to value in real estate appraisal. And doesn't matter if it's our office with the county for tax purpose, or an independent appraiser that's appraising your property so you could get a loan with a bank. We all have to follow these 3. We all have to include or consider these 3 approaches to value. The first being the cost approach. The cost approach is simple. We derive land value. To that land value, we add the depreciated value of any improvements to the property, and we come up with a value. The cost approach works really well for newer buildings. Once the buildings get to that 7 years and older, depreciation gets a little subjective, and the cost approach is not as accurate. The second approach is the sales comparison approach. This is the one everybody's most familiar with. You're always looking for the comps in the area. If you put a contract on a house, you want to know what similar properties are selling for before you put the contract on the house, just to make sure that you're not overpaying. And as appraisers, we do the same thing. We look at the market and determine what people are paying for properties in that market, and try to come up with a value based on similar sales. Applying the characteristics of similar sales to your property. Lastly, we have the income approach. The income approach is mainly used for commercial properties, where the motivation for the purchase of the property is in the income that property can produce. So think about apartment buildings or shopping centers, where the person buying the apartment building, they're more concerned with how much rent am I going to make off of, how much money am I going to make in rents after I pay all my expenses. That's the income approach in a nutshell. And Lance.
Lance, you're on mute.
Thank you very much, Aisha. So now we're going to look at the real-world approach to value. Not only do we consider those 8 criteria that the Florida statutes say we required to consider, but other factors that affect value are the improvement size, such as the square footage of the main living area, heat and cold area, any ancillary areas like garages, screen porches. Obviously, we have to consider quality grade, which some telltale signs are architectural features. The more roof lines a house has, obviously, the more valuable it is. Construction material, is it a wood frame house or concrete block stucco? We look at the flooring, we look at the type of roofing. Another big factor that affects a property's value is the effective age. You could have 2 houses that are 20 years old, and the effective age is a measure of how new the property really is. So if you've done a lot of improvements, you improve the kitchen, improve the bathrooms, you replace the roof. If you haven't done anything on a 20-year-old house, the actual age is 20 years old, the effective age is 20 years old. But if you again you replace the roof, replace AC, those things make the house effectively younger. So obviously the more renovations you do, the house is effectively younger, you have less estimated depreciation. What is capping? What is deferred value? Homesteaded properties are capped at 3% or the CPI, whichever is lower. CPI is the Consumer Price Index. For the last several years, homestead properties were capped at less than 3%. 3% is the max. And now because inflation is more than 3%, the annual inflation rate as measured by the consumer price index, this year the homestead properties are capped at 3%. If it's not a homestead property, it's capped at 10%. And agricultural properties are not capped, and that's due to their preferential treatment when it comes to taxes anyway. So agricultural properties are not capped. What do we do if we disagree with our value? Again, the Alachua County Property Appraiser's office, we come up with an assessed value for the property. We mail out the trim notices. Again, we're going to send those out, I believe, August 18th. And if you have any questions after your trim notice comes out, if you question the value, please call our office. We like to work with people whenever we can. If you tell us something that you know that makes your property less valuable, we want to know that. But just because you don't think it's worth as much as we say it is, we need something factual to lower values. So if there's something, for example, a sinkhole or the house is unlivable because of fire damage. Again, we assess it as of January 1st. So any condition of the property as of January 1st that makes the house less valuable, we need to know that. And then sometimes reasonable people could disagree. We might think we think your value is what we assess it at. You may think it's lower. So sometimes reasonable people can disagree. So that's why we have the value adjustment board. Again, as Chris was saying earlier, the deadline to appeal for the value adjustment board is September 12th. And then at the value adjustment board, you present your case why you think the value is lower. We're going to present our case why we think it is what we assess it at. And a magistrate who does not work for the property appraiser's office, who's completely independent, he listens to both sides and he makes the decision. And if the magistrate goes with us, right? If you still disagree, you could pursue remedies in circuit court. Nancy?
Hi, I'm Nancy. I am the public service coordinator. And a homestead exemption overview for you is any person who on January 1st has a legal title or beneficial title to the equality to real property in Florida and in good faith makes the property his or her permanent resident and permanent resident of another or legally natural dependent upon him or her is entitled to an exemption up to the assessed valuation, as we mentioned before, $25,000 on the residence and contiguous real property. Every person qualifies to receive the homestead exemption, entitled to receive up to a $25,000 homestead exemption for the assessed values exceeding $50,000, which then, like we said, becomes the $50,000 exemption. And what does this mean? If you live and you own your property, you can apply for a reduction to lower your property tax liability. An example we given here is the market value. Assessed value is $100,000. The homestead exemption would take $50,000 off of that, and the taxable value would become $50,000. So the average tax savings we tell you is approximately $925 a year. Homestead exemption assessment changes. This is commonly asked a question. Ownership, it would be like a sale of the parcel or change. So if you change the ownership of your warranty deed, like in a title, trust or a life estate, any type of changes in your ownership. The primary character of your property would be like if you rented or you mixed used it. A lot commonly questions are asked. Can I make my property an Airbnb? That would be a mixed use of your property for the homestead exemption. Residential factors, it would be, have you moved your permanent resident indicators to another address? Temporarily moved for work purposes or anything like that would be considered residential factors. Marriage is if your spouse, if you were married after owning your property, you would need to notify us. The homestead exemption we need to know your spouse's social security number for the application. Postal service would be renewal receipt if you It was returned unclaimed by a change of address. Original exempt. So if someone was deceased, the vital statistics by the state reported our records indicated the deceased with social security number. So we would need to know any changes again. Additional exemptions, in addition to the homestead exemption, would be a senior exemption, a widow exemption. We offer this civilian disability exemptions, which is the 500 blind and 500 totally permanent disabled, that not requiring the use of wheelchair for mobility. Disabled veteran exemptions and surviving spouses benefits as well. These would be veterans with a disability service-connected 10% or more. Civilian total permanent disabilities exemption, certified as quadriplegic, certified as blind, certified paraplegic, hemiplegic, legally blind, or the use of wheelchair for mobility. Additional exemptions are first responder, totally permanent disabled in the line of duty, or surviving spouse or a first responder who died in the line of duty. So they're listed there as well. Service connected, totally permanent disabled veterans, again, with 100% or more, and surviving spouse, service connected, permanently disabled veteran as well, and a tax discount for veteran age 65 years or older and combat related disability as well, and active military exemption, deployed military exemption as well. And our information to contact us if you have any questions, and our website's there listed as well, along with our email for our office.
I would like to thank our panelists for informing everyone about the trim notice process. We have time, we have 30 minutes left, so we're gonna go to our chat and review the questions that was submitted during registration. Okay, so these are pre-submitted questions. The first question is for Chris. Once the trim notice is mailed, how much time do I have to contest the value?
Okay, so once a trim notice is mailed, Florida statutes state that you have 25 calendar days to contest the value or file an appeal. This year, for example, we are mailing the trim notices on August 18th, and the last date of file an appeal will be September 12th.
All right, thank you, Chris. We have a question for the tax collector. Matt, can you answer this question for us?
Sure.
How do I make a good faith payment to the tax collector? And what amount do I pay if I start a VAB case?
Sure. So you would need to let our office know that this is a good faith payment. We ordinarily wouldn't take a partial payment for taxes, but when it's a good faith payment due to a VAB case, the law allows that. So you have to pay 75% of the ad valorem taxes and 100% of the non-ad valorem taxes to make your good faith payment.
Oh, thank you, Matt. The next question we have is, what exemptions are available? Nancy, can you answer this for us?
I mentioned pretty much all of them in the seminar, but our website does offer an exemption guide. We've added that in the last 2 years under forms, and it's pretty much broken down for you as well. The added benefits for qualified homestead that I mentioned, and then veteran and first responders has its own section as well. And along with the form and documents that you need when filing is on there as well.
Okay, so they have another question. It says, if I am a senior widow after March 1st, can I still apply and qualify for this exemption?
So yes, we assess as of January 1st every year. So therefore, if you were 65 years or older as of January 1st, and You had a limited household income, meaning like anyone living on your property or that may use your address for mailing purposes are considered your household income. You meet the requirement for that tax year, which we can give you that amount. It does change every year. And you being a widow as well, if your spouse was deceased prior to January 1st. Those are two exemptions in themselves that you would need to apply for, but we do offer late files after March 1st if you meet those guidelines.
And when can I apply for a homestead exemption?
So the homestead exemption, we suggest that you are settled, that you moved on to your new property, your utilities have been switched over, your Florida driver's license, any identifications, mailing addresses have been updated. It will make the process much faster for you where we won't have to ask for more documents, but as long as you've updated those, then you're welcome to apply anytime after.
Okay, and another follow-up question. Do you propose to increase the annual income limit for property tax exemptions in view of the inflation?
The income limitations are set by the Department of Revenue annually. Our office does not have any control over the setting of these limitations.
Okay, thank you, Nancy.
You're welcome.
The next question we have is for Lance. How does the Alachua County Property Appraiser's Office value all of the homes in the county every year? Is every property visited each year? Lance?
Two great questions. Thank you very much, Aisha. Yes, each year we value all the property in Alachua County as of January 1st using the previous year's sales and mathematical models that we have developed using market data and input from local market participants. So we use last year's sales and using mathematical models. And the other question is, do we visit every property every year? And the answer is no. We're required by state law to visit each property once every 5 years, but typically we visit each property more often because we visit them each time a property sells and when permits are issued and completed.
Okay, thank you, Lance. Chris, I have a question. What do I do if the incorrect number of bedrooms for my property is listed on the property appraiser's website? Is this impacting the value of my home?
Sure. Well, first of all, if our information is incorrect, please give our office a call and we'll send somebody out to the property to correct the error. In the case of an incorrect bedroom count, this typically will not affect the value. Our valuation models are calibrated to account for heated and cooled square footage, not the number of bedrooms. Sometimes people build weird things. So on the off chance that there's an anomaly, for example, a 5,000 square foot house with only one bedroom or an 800 square foot house with 5 bedrooms, at that point, we'd go out, we'd inspect, and then we would adjust the value due to any functional deficiencies with the building.
All right, thank you, Chris. The next question is, can anyone qualify for installment quarterly payments? And when is a good time to sign up? Matt, can you answer this from the tax collector perspective?
Sure. So when the tax bill comes out in November, that's when you can sign up for the following year. So starting November 1st, we can start signing up people for next year's taxes. So if you get your bill in November and it's an annual bill, you have to pay that once a year. You can go ahead and sign up. As long as your tax bill is $100 or more, you can sign up. The only other time we don't recommend signing up for quarterly is if your mortgage company pays your taxes and you pay into an escrow account monthly when you make your mortgage payment. You don't want to do quarterly in that case because escrow companies are required by law to pay in November to give you the largest benefit or the largest discount. So they do not like to pay quarterly, and it's not a very good system. Their system is set up to pay annually. So if you have a mortgage company paying in the escrow, you don't want to do quarterly.
All right, thank you, Matt. The next question is probably for Nancy. How is the Save Our Homes they say SOH, carry forward amount applied to the new home?
The Save Our Homes deferred value is from the prior homesteaded property. The deferred amount is carried over as a one-time savings off the start of the new market value of your new property. So there is a calculation based on if you are downsizing in market value onto the new property, but let's just say that you decided to upsize and give you a simple calculation of it. So if you had a deferred value from your prior property of 20,000, you purchased something here that was 200,000, and you were able to port the deferred value. Save Our Homes value would be 200 minus the 20,000, which would then give you 180,000. And then you minus the homestead, that would qualify for a 50,000 exemption, which your taxable value would become 130,000 versus the start would have been 200,000 without it. Any exemptions or deferred value. But yes, it's a one-time savings.
Thank you, Nancy. How can we verify our taxes were being paid by our mortgage company from our escrow accounts? Matt, can you explain that?
Sure. So majority of the mortgage companies, they pay electronically, and they use it. Most of them use a tax service to do that. So if you talk to your mortgage company, they've probably sent the money to their tax-paying agent probably early in November. But most of the time, the payments that we receive come in later in November. So usually toward the last week of November. And so we'll get the majority of the payments from the mortgage company. Sometime in November, though, they were required to pay them in November. So on your tax bill, there's a QR code that if you scan that with your phone, it'll take you directly to your account on our website, and you can see if it's paid or not. We usually just recommend wait till the 1st of December and then check, and it should show paid. Sometimes they don't pay until the last few days of November. You can always do that. You can always call our office as well, and we'll check to make sure they're paid. But they are required to pay in November. If they fail to do that, they will pay them later, but they should only charge your escrow the November amount. So it's important to know that they're required to pay them in November.
Oh, perfect. Thank you, Matt. The next question is, this is a very specific question. It says, how can I check to see if Duval County calculated my homestead exemption, my homestead portability to my Alachua County homestead property? I'm gonna read that again. How can I check to see if my Duval County calculated my homestead portability to my Alachua County homestead property? Nancy, can you answer that for us?
Yes. So when you apply for homestead, and you also applied for a transfer homestead assessment difference, it's an application in itself too. If the previous address in Duval, our office would have sent this application then to Duval, and they would respond with what your deferred value, as I mentioned earlier, for the previous property would be against the current values that we have here in Alachua County to calculate the transfer amount. The transfer amount, if any, would be listed in your trim notice under the Save Our Homes, and it will be mailed on August 18th and posted on our website. But anytime you have questions about that Save Our Homes, we can look at it and see if you benefited from the prior owner, if you're a new sale, if you don't have any value as well, and how you can accrue value based on that.
All right, thank you, Nancy. The next question is, I am over 65. What property tax deductions are available to me in Alachua County? Nancy, can you follow up with that one?
So it's the same as I said before with seniors. We do offer a senior exemption for seniors with limited household income. Again, you can always call our office and find out what that amount is each year. And there's an application for it as well. And the 65 years or older would also has a veteran with combat related as well. But those are the two that we
All
offer.
right, thank you, Nancy.
Mhm.
Matt, can you tell us, will property taxes increase this year?
That's a great question. You know, the property taxes, there's kind of three variables: your value, is one, the tax rate is one, and then the non-ad valorem assessments. So all of those can change from one year to the next. I think historically our millage rates don't change a lot. They do change it annually, but usually not a lot. So if values are increasing, that would, if your millage rate is about the same, then your taxes would be increased. Your non-ad valorem assessments, you know, those vary between properties and owners, depending on if their garbage can is a big can or a small can, or you know, if they have a fire assessment or stormwater or a PACE assessment. So all of those affect the amount of taxes. Generally, I think overall your taxes are pretty, if everything's consistent from one year to the next, they don't increase a whole lot. Now I'll let maybe somebody there, the property appraiser's office, explain maybe if the, you know, with a homestead property, they may increase because of the deferred value a little bit each year. So, and if the value increases a little bit each year, that of course the taxes may bump up a little bit from one year to the next due to the deferred value and the 3% cap on the value.
Nancy, you want to elaborate on that? Where's Nancy? Oh,
I'm here. I'm sorry, what was the question?
we were
So-
talking about, go ahead.
Yeah, I was just talking about the taxes could increase annually just because of the value increase due to the cap, the value increasing, you know, maybe 3% annually because of there's a Save Our Homes deferred value.
Oh, yes. Well, the Save Our Homes value will stay there. Depending on if it goes down, obviously we have to pull from that. So you're never assessed over your cap of your 3%. But over time that it can accrue, but it's going to stay. I guess I don't.
It's not going to go over 3%.
It's not going to go over 3%. Yes, sorry.
That's okay. Matt, we have another follow-up question. Is it possible for the property taxes to decrease?
Certainly, again, if value decreases, the taxes will decrease. If the rate decreases, that could cause a decrease. And then of course the non-ad valorems. The other thing is if you get additional exemptions or you're a new owner and you bring a lot of the Save Our Homes value, if you bring that from another property, you may see a decrease in taxes.
All right, thank you. I think you answered as any other one, but they just followed up with another question. So I decided to ask you anyway. What do I need to do to apply for homestead exemption, Nancy?
So again, as I mentioned, updating your mailing addresses, you have maybe a whole month's utility from living on the property with you. Your driver's license or ID has been updated as well. Really, those two things are the main things to come in and be able to apply. That you can bring a copy of your deed too, if you don't see it reflected in your name on our website, that's helpful as well. But we do also offer an e-file, so you can do everything online as well.
All right, thank you. And I think Chris answered this question in the presentation. It says, how is property tax calculated for the property? Matt, you want to answer that?
Sure.
Or-
So the property value is determined by the property appraiser, and then the tax rate is determined by the taxing authorities. So you've got this total millage rate for each property based on where it is in the county. So the value times the rate gives you the tax as well. The millage rate is the number of dollars per $1,000 of value. So the way I have to think about it is there's $100,000 of value and the rate is 22 mils. That's for every $1,000 of value, there's 100 of them. So that's $2,200. That's kind of the way I think about it. But it basically is the rate times the value. And so the rate is dollars per $1,000 of value. That makes sense.
All right, and then minus any exemptions that you have.
That's correct. That's exactly right.
All right, the next question is, when is my first property tax bill due? And what is the first property tax bill due when you first purchase a home at?
So, the properties are assessed January 1. And so the tax bill comes out in November. So if you purchase that property prior to November, you're still going to get a bill in November for the full year. And when you purchase that home kind of in that mid-year, at closing, your closing agent should make those adjustments so that the seller pays you their portion of the tax, and then you're responsible for the full bill in November. So that can be confusing. So usually you'll get that bill in November. If you were to purchase, yeah, I guess that's probably the answer.
Are you good?
Yeah.
All right, the next question is, for a first-time home buyer who is new to this area, Lance, you probably can help us out with this one. They would like to better understand how property appraisal and tax collectors' offices work. What's the main difference between our offices?
Great question. What we do at the property appraiser's office is we establish the value of the property. So we establish the value as of January 1st. Then we review and apply any exemptions and classifications that may reduce the individual property tax values. The tax collector, sends tax bills out, they collect the payments, they approve deferrals, they sell tax certificates on properties with delinquent taxes. They answer questions about payment options and deferrals, and they also process and issue refunds for overpayment of property taxes.
All right, well, thank you, Lance. The next question is, under what conditions does the property appraiser's office do a reassessment of my property? Nancy, can you answer that one? It sounds like something that Chris should answer, but
I could answer it.
thank you.
So a reassessment occurs every year based on current market sales in the area. We're required by law to visit every property at least once every 5 years. However, we will visit within that time frame if a permit has been issued, or if there was a sale, if a sale occurred, if a permit was pulled, we will revisit that property more frequently for things like that.
Okay. And are businesses valued through the same processes as residential properties?
So we don't value businesses. We only value real estate. For example, if there's a restaurant on Archer Road and there's a pizza place in there, we're going to value the building that houses that restaurant. We're not valuing the actual restaurant. So that being said, in the case of commercial property, all similar properties are valued the same. Specifically for each property type, the sales approach, cost approach, and income approach to value are considered. And depending on the property type, one approach to value may be given more weight than another. For example, for single-family homes, the sales approach is given the most weight. With income-producing properties such as apartment buildings and shopping centers, the income approach is given the most weight. But again, regardless of property type, all approaches to value are considered but not necessarily used.
All right, thank you, Chris. What do you recommend realtors tell clients who ask about their tax bills, ask what their tax bills will be for the property, Lance?
This question is so important. Not only do we encourage realtors to ask this question, or not so much ask the question, but tell their clients as well as title companies. But it's really important to tell buyers not to use the previous owner's taxes to estimate the new owner's property taxes. So don't use the previous owner's taxes to estimate the present what the present owners, once he purchases the properties, their taxes are going to be. Why? Because a lot of times the previous owner has a lot of deferred value in their property value, and the new owner will probably not be eligible for it. So oftentimes the property taxes for the new owner are going to be a bit higher than the previous owner, again, because the previous owner may or may not have the same amount of deferred values as the previous owner. So that being the case, we have a really cool feature on our website. If you go to our website and you search for the property in question, when you see results pop up in the upper right hand corner, there's going to be a blue bar, and you're going to see a link to the tax estimator, and you just enter the requested information. It'll give you the estimated property taxes for that property. And it's really important to search for that particular property because, as we discussed previously, that the millage rates vary location to location. So depending on where you are in Gainesville, different property owners are going to have slightly different tax rates because the individual millages, as determined by the taxing authorities, vary slightly. So if you're looking at buying a property, search for the property by address or however you want to search it for on our website, and use that tax estimate. Do not look at the previous property owner's tax bill. Very bad idea.
All right, thank you. The next question is, why aren't agricultural properties capped like residential properties, Chris?
So the Florida legislature decided that since agricultural property, and also I'll throw in conservation land, since they already receive preferential tax treatment, those properties are not protected by the cap.
Absolutely. And another question for you. Why has my value increased substantially when I haven't made any renovations or improvements to my home?
Well, there could be many reasons for a substantial increase in the market value of your home. But the main reason currently is probably due to the fact that we are in a rapidly appreciating real estate market, which is primarily due to increasing interest rates. So people want to buy before interest rates go higher. People are moving from very expensive housing markets such as California, New York, New Jersey to Florida, which has much lower real estate values. Another issue that we're seeing is that real estate investment trusts are buying up a lot of homes and to rent out, and they're just paying a lot of money for these homes. So all of those are market forces that are at work that are causing increases in the market value of properties. So if the substantial increase was in the assessed value as opposed to the market value, so if you see the substantial increase in the assessed value of your home and you did not change title or remove an exemption, please contact our office because something's probably wrong with the calculation. Okay, so if you have a homesteaded property, regardless of how high the market value went up, your assessed value should be capped at 3%. Okay, if that assessed value did not cap, and you still saw an increase in the assessed value over 3% from last year, please contact our office.
All right, thank you, Chris. We are at the end, but I'm gonna do 3 more questions and then we're gonna close it out. I'm just gonna pick this one. Is for Chris, this is you again. How is new construction valued and what does this mean for my taxes this year?
So substantially complete new construction is assessed as of January 1st of each year. For example, if the new construction was complete on January 2nd, it will be assessed the following year. New construction is not capped the first year. It will go on the roll at full market value, regardless of any caps existing on the property. In the case of commercial property, any new construction totaling more than 25% of the overall market value will completely remove the cap from the property. That does not happen in residential, but in commercial, if you improve the property and the value of the new construction is 25% more than the overall market value of the property, the cap comes off. In residential, the new construction portion is not capped. If you built an addition to your house remains capped. The square footage of the new addition is not capped.
All right, that's very important. Thank you, Chris. Matt, we're gonna ask you 2 questions from the tax collector's office. How do I change or remove my name on the tax bill?
So in order to change or remove a name, I believe it needs to be done with a deed, through a deed process. And so that would be something you would want to prepare, have an attorney prepare and have recorded with the official records of the county. And then once that's done, the property appraiser will pick up that information and make that change on the tax roll.
All right, and then last year, why was my tax bill higher than my trim notice?
So I think ordinarily the trim notice is going to be very accurate and a very good estimate of what the taxes will be. There are times though, some of the non-ad valorem assessments may not be included on the trim notice because the property appraiser, they don't go through the property appraiser's office and the property appraiser may not know those. So I would say, I think I see that more often where some non-ad valorem assessments were not included on trim. And so once the tax bill comes out, these non-ad valorem assessments are of course included there. So the bill may be higher than trim. Ordinarily, I think the trim notices, you're going to see a very similar tax bill. Tax rates can be changed at the, there in the last, during that, after the trim as well. I don't think rates are final. So, there could be some rate changes by the taxing authorities. And so that again would affect the trim, would affect the tax bill and would make a difference between the tax bill and the trim notice. So that would be something the property appraiser and the tax collector are not, don't have any authority over. It's just that does happen sometimes.
All right, thank you. And we have a couple more questions from the live chat. And this is probably for Nancy. My trim notice does not have a current value 2021 for Save Our Home section. Why should this be blank?
So it probably is a new homestead or a new construction. As we mentioned, being capped at 3%, it's after your first tax year. So after you've applied, made application and been approved, then you'll start accruing your Save Our Homes, depending on the area of your market and so forth.
All right, and the last question is probably for me, is will a replay be sent out? And I believe it will be on YouTube. And we'll send a link out for that after the video. All right. And I think that's all the questions that we have for tonight. Hold on, let me. So that concludes our presentation. I want to thank you all for coming out tonight and being a part of this live presentation for our first trim notice as we collaborate with the tax collector, and we truly appreciate your attendance. And if you have any further questions, feel free to contact both of our offices. The tax collector is represented as well as the Alachua County Property Appraiser, and I wish you well and have a good night.
Thank you.
Thank you.
Thank you.
Thank you, everybody.
Thank you all.